So let's look at another question, another illustration. We have Abdurrahman Limited. Abdurrahman Limited is an agricultural business which commenced is an agricultural company which commenced business on February 1, 2020. It is engaged in plantation, cattle ranching, and poultry business and prepares its financial statement October 31 of every year. Its recent financial statement show the following results. We have all of this. We have other information. Preliminary expenses amounted to 1,500,000. Okay, 1,056,000. That's what it should be. And it is to be written off in equal amount over a period of 8 assessment years, commencing from the period ended October 31, 2020. They now give us the breakdown of the preliminary expenses, and we are given the schedule of the details that were extracted from the company's register of PPE. We were told that there was no disposal of any asset within the period. We are asked to compute capital allowance for relevant assessment year, and to compute adjusted profits for relevant assessment years, and we are to compute income tax liability for relevant assessment years. So we'll have Abdurrahman Limited. Abdurrahman Limited.
Okay.
Please, let's bring out our calculator.
Yeah, already.
We have the first thing we are asked to do is to compute capital allowance. And looking at the information given, the business is just commencing operation. So to do capital allowance, we'll have to do determination of basis period and QCE allocation for
But do you
relevant
want
assessments. I'm with you.
Yeah, we have started with a company income tax so last week.
Yeah, I know. This is a company income tax question, but they want
Okay.
us to do capital allowance. Capital allowance is just one of the requirements. So those are like the things you should expect in exam. They may not test company income tax in isolation. They will test company income tax and they will put capital allowance in it, put basis of assessment in it. Do you understand?
Right.
So we have year of assessment. We have basis period for accessible profits. Alhamdulillah. We have basis period for capital allowance. Then we have the QCE. So what do we have? We have, if the business commenced operation on 1st February 2020 and they make their first account to 2020, 2020 is under the new law. So we'll have the first year of assessment will be 2021. The rule of commencement is the first year of assessment is the year succeeding the year of first account, and the basis period will be from 1 February 2020, which is date of commencement, to 31/10/2020, which is date of the first account, end of the first account. The second year will be 1/2022, and that will be 1/11/2020 to 31/10/2021. Then we can just do 2023. That will be 1/11/2021 to 31/10/2022. The basis period for capital allowance will remain the same since there is no overlap, no coincidence, and there is no gap. No overlap, no coincidence, and no gap. 1 to 2020 to 31/10 2020. 1/11/2020 to 31/10 2021. Then 1/11/2021 to 31/10 2022. So for our QC, we'll now have what? We now need to go and check the QC they said they incur. So first thing first, if you look at the breakdown of these preliminary expenses, we have some items there that are capital in nature, like cost.
Oh.
We have some items there that are what? Capital in nature. Like we have cost of initial clearing of land, cost of initial clearing of land and cultivation of land for plantation. We have what? Cost of labor and
Technical
technical
expertise.
on the first trip, on the first planting, operations of plantation. We have cost of nursery plants purchased from Federal Ministry of Agriculture, and we have cost of nursery plants from the Institute of Agricultural Research and Training. So all of these are plantation expenditure. Plantation expenditure. So since it was incurred preliminary, that means it was before the commencement. We'll assume it was on the date of commencement. So we'll have plantation expenditure. Then we proceed further. We have other things. February 2, 2020, motor vehicle. It will fall under 2021 year of assessment because that's where the date falls into. February 2, 2020, office furniture. Still in the same 2021 year of assessment. Agri tractor, November 7, 2021. That will fall into what? Into the third year. Agri tractor. Then we have what? Equipment used in spraying plantation. That's plantation equipment. December 2020. That will fall here. Plantation equipment. Plantation equipment. Then we have building. January 9, 2021. That will also fall into the second year, building. So having said that, we can now go ahead. First thing first, let's calculate. Let's calculate the cost. So let's calculate what is the cost. Calculation of cost of plantation expenditure. You know, the plantation expenditure is part of our preliminary expenses, have we? To calculate its cost, we have cost of initial
and cultivation.
Initial clearing and cultivation. On
70,000.
cultivation of so 70,000. Then we have cost of labor and technical expertise.
6,000, 60,000, 69.
56,060. Then we have cost of nursery plants
Purchase.
from Federal Ministry of Agriculture. 191,540. Then cost of nursery plants from IART. We have that to be 130,000. So the summation would be how much?
447,600. 447,600.
447,600. 447,600. Okay. What do we now have? Okay. So we can now go ahead to do our computation of capital allowance. Computation of capital allowance for relevant year of assessment. We'll have what? Details.
So,
We have plantation expenditure,
motor vehicle.
we have motor vehicle,
Office furniture.
office furniture,
Agri tractor.
plantation equipment. We'll come back to agriculture since it falls into the last year.
Motor vehicle.
Building, then the agriculture,
So,
and lastly total.
yeah.
So you can now say 20, the rates. What are the
With
rates?
plant and machinery. Plant and okay.
Coming, please.
Okay.
Okay. No one laughing. So capital allowance, we will have what? Plantation expenditure. That is 30/50.
Okay.
Motor
25,
vehicle
50,
50/25. Office furniture 25/20.
25,
Plantation
20.
equipment 95 mil. Then 15/10. Agri
Okay.
tractor, that is agricultural plant expenditure, that is also 95 mil. So with this, we can now proceed to say 2021 year of assessment. What's it called?
Initial allowance.
Cost.
I mean,
The cost of the
cost.
asset. Plantation expenditure 447,600.
447.
Auto vehicle 2,040,500. Office furniture 355,000. So I think that is all we have. Others fall into this following year. So we'll make it nil. Then initial allowance. What is the figure for initial allowance?
134,280. Am I correct?
Sorry, what do you call it?
134,280.
134,280.
Yes, sir.
Uh-huh. So this one will be 1020250. Abi?
Yes, sir.
So the other one will be what? 88,750. So let me calculate the total initial allowance and we can proceed to annual allowance.
Sir.
Sir?
Oh, continue. Okay.
So our annual allowance will be what? 447,600 minus 134,280. So 50%, that should be 2 years divided by 2, but multiplied by the business commenced in February to October. That is how many months? That is 9 months. Abi?
Yes.
That is 9 months. So this will be 117,495.
Sir, I'm still having difficulty on how to compute this annual allowance.
Okay.
Honestly,
How
that's
did you
the question that I asked you the last time we met.
how
But I'm
do we
having issues
calculate?
especially on this annual allowance. So,
What's the formula for
there
annual
is
allowance? First year.
uh,
In the first year, it is cost minus initial allowance divided by
allowance, the number of cost
divided by
minus initial allowance divided by the
divided by
number
number
of
of,
years. Yes.
and how do we get the number of years? It's just 100 divided by the annual allowance rate. So in the case of motor vehicle, 100 divided by 25 is 4. So you do 2,040,500 minus 1,020,250 divided by what? Divided by 4 years. Then because the number of months in the basis period for that first year is not up to 12 months, you will say multiply by 9 divided by 12. That is 191,296, or let's say 297. 297. Then the next one, for the office furniture, it will be 355,000 minus 88,750. Abi, divided by how many
Yes.
years? So the useful life will be 5 years. Sorry.
355,000 minus 88,750. 2,262. That is 250 divided
That's
by
then that will be multiplied by 9 divided by 5 first. Then multiply by 9 divided by 12. That's to prorate it. And that will give us 39 what?
5 times 9 divided by
39,938. Abi?
divided by 5 times 9 divided by 12. That's 9,937. Okay.
So what do we have? What's the total initial allowance? What's the total annual allowance? Then we go to 2022 year of assessment. Tax written down value. Then additions.
Total annual allowance
Is what?
348,730.
348,730. Cost of the plantation equipment is 70,000. The
For
building
annual allowance, annual allowance,
281,000.
initial allowance, sorry, 120,
Figure
1,243,000. Total
1
for initial
million,
allowance,
1
243,
million
243,
242,000
280,
680.
280, 280.
280. So what is the summation?
Um, 15920,
1
15
million 592
and 10, 010.
010. Okay. So we have, what are the tax sitting down value?
7,
226 312. Then we have
the
202. I'm with you.
for plant and for plant expenses, for plant and
Mm,
expenses, tax written down
plant
value,
expense, plantation
5,
expenditure.
plant expenses, 195,
195
825.
825.
Yes, sir.
So then, having done that, we'll calculate initial allowance for the new asset. Abi? Initial
Mm,
allowance will be this one, 95% of the 70,000. That is 66,500. And the other one, 15% of 2,081,000. That's 312,150. Then annual allowance for it all. This one is useful life is 2 years and it has already
mm,
used 1 year. So this is the last year. The formula in the last year is tax sitting down value minus 10 naira x. X is number of assets. So how many assets do we have here? Just one. Divided by
1,
1. So that means it will be 195
8,
81.
5.
Why this will be what? The 828, which is the tax sitting down value, divided by remaining useful life of 3 years, and that will be 276
276,
318.
3.
And this will be the tax written down value also 226 312 divided by remaining useful life of 4 years. That's 56
5,
578. And this being new assets, it will be cost minus initial allowance divided by useful life. But this one, the annual allowance rate is nil, so it will be 0. And the annual allowance for this will be what? This will be 176,885. And we will not bother prorating this one because in the I like I told you, aside the first year where we can have basis period of not complete 12 months, it is only in the year of cessation we will also have a base, we can also have a basis period that will not be up to 12 months. So having said that, we have 2023 year of assessment, tax sitting down. This will be 10. Oh yeah, oh yeah, oh yeah.
552,635.
552635.
169,734. 169,734.
179
169 9734.
159 734, Abby.
Yes.
Okay, what else? This last one, please.
1591
1591
165
365, or what did you say?
965 965.
965. Okay. So please calculate the total initial and annual allowance. Initial should be 378.
Initial allowance 378.
378 650. Annual allowance.
Annual allowance 705596.
709
715
59.
7005 705.
Then 596.
Yes, sir. Total 1084 1084
1084.
246.
246. Okay. Okay. What's the next thing? We have initial allowance on the new assets, which will be at 95%, and that will give us how much?
Okay. 985 150. 985 150.
18
985 150.
985 150. So that's the same thing as the initial allowance. So annual allowance will be what? Mil year 276,318 here. You can be calculating the tax sitting down value 56,578. It will be nil here also. It will be 176,885 here. While for this it will be nil also. So we'll have 2024 year of assessment, tax sitting down value. It will be 10. It will be 3,500. And we'll have what?
For the first one, second one, 276317. That is motor vehicle.
276,317. And the next one, 103,156. And the next one,
3.
51,850.
1415.
141. Uh-huh.
080.
080. So what do we have as the total annual allowance in that third year?
Total 509781.
509781. So plus that initial allowance, what do we have?
1494.
1494
931.
931. Okay. Okay, so that is that. So we are done with the first requirement. The next requirement is for us to compute adjusted profit. So we can just say computation of adjusted profits for the year ended, for the years ended 31 October, we have 2020, now we go 2021. We have what? So we'll start with the net profit as usual. Net
Net
profits
32. No.
naira in thousand. Net profit is 32,654, Abi,
Yes.
and this one is 92,013. Then we'll add disallowable expenses. Disallowable expenses will be what? We have preliminary expenses. Preliminary expenses are generally disallowable, even if it doesn't contain capital expenditure. Any expense that is not incurred during the year will not be allowable. So 132 or loss paid during the year. Then we have what else? Depreciation. Purchase of cockles will be allowable. Abi? Animal feed will be allowable. Um, Wages and salaries allowable, but depreciation will be disallowable, and that is how much?
492.
192
900.
and 900. Then office rent allowable, drug and vaccines for animal allowable, interest on bank loan allowable, except they now tell us the loan wasn't used for the purpose of the business. General expenses allowable, increase in closing inventory. That one is adjustment for cost of sales. So all of it, all of it, all of it are allowable, and we don't have non-taxable income. So we'll just add this up. What do we have?
624.
So the adjusted profit will be how much? Because we don't have any other thing to do.
That is 33278.
33,278. Mm-hmm.
93045 for the year.
93,045. So if that is it, then we can now proceed to the third requirement, which is to calculate the income tax liability. Calculation. Let's use computation of income tax liability for relevant year of assessment. So we have, what are the relevant year? We have 2021 year of assessment. What do we have? Adjusted profits. Adjusted profit, which is how much? 33.8.
3278.
Abi?
Yes.
Then we now have what? Less capital allowance, because we don't have loss relief. So the next thing we only have is capital allowance. Capital allowance for the year will be how much? We'll go back and check. 1592010. That will be 1592.01. Remember, those figures weren't quoted in thousands. So, and because the capital allowance is lower than the two-thirds of the accessible profit, even though if it is higher, we will still relieve all, because this is an agricultural business. We can relieve it all in this case. And we will have what? What do we have? Carry
Nil.
forward.
Nothing.
So 1592.01. If we relieve the capital allowance, what will now be our chargeable profits?
Three one 685. 31685.99.
0.99. So what will be the CIT at what? We'll go back and check what is the turnover. The gross revenue or turnover in the first year was 50,000. That means the CIT will be at 20%. And what's the 20%?
10,000.
10,000 and what? 20% of this figure of the 31,685.99.
Sorry. 6337.19 6377. 6337.
6337 point what?
Point 20.
Point
I
20.
approximate
So EDT will be at what? At 2%. EDT at 2%. The 2% will be on the 33,278.
665.56. 665
665. No. You are doing 2% now. 2% is 0.02.
Yes,
Will
I
not be
know.
that.
33,278 times 0.02. 665.56.
625.
665.
665.56.
Yes.
Okay, 2022 year of assessment. We will have adjusted profits. How much? So we calculated the adjusted profit to be 93,045.
92.
93,045. No, not the net profit. So you know we've adjusted it here.
Yes, 93045. So
3045. So with less capital allowance. Since the whole capital allowance in the previous year was relieved, we don't have brought forward. We'll only have capital allowance charge for the year. And that is how much? 1084.246. 1084.246. Relieved with what? 1084.246. So that will give us how much? Carry forward 1084.246. That will give us what?
91960.
91960. Point what?
754.
754. That is our chargeable profit. CIT at 30% because the turnover was above 100 million, and that will give us how much? EBT at 2%. That will give us how much?
27588. 27588. 588.
588.23.
0.23.
Okay. The EBT, don't forget, is on the adjusted profit. What's the figure?
1860.9.
18.
1860.9.
1860.9. Okay, 1860.9. Okay, nice. So that is that. So let's look at this. Let's look at this. We have Fortune Nigeria Limited. Fortune Nigeria Limited. A reputable soap making company is based in Lagos and registered over 10 years ago. The financial year end of the company is 31 December every year. The financial position of the company for year ended 31 December 2021 was as follows. We have all of this. We have included further relevant details as follows. Included in other income was the sum of 850,000 earned as profit on disposal of assets. Salaries and wages included housing allowance of 10 senior management staff who were paid a sum of 200,000 each per annum. 1/4 of the expenses on rent was paid on the apartment occupied by the father of the managing director. Half of the advertisement cost was incurred on sponsorship of a television program where airtime was allocated for the promotion of their products. Public relations and entertainment of 3,150,000 included the sum of 308,000 paid as commission to a sales agent. The breakdown of the miscellaneous expenses is as follows. We have cost of computer hardware, furniture and fittings, cost of fuel and lubricants, printing and stationery. The amount secured as gift and donation included the following: donation to Egba Community for Town Hall Development, donation to University College Hospital, Ibadan, gift to a gubernatorial candidate for electioneering campaign. Breakdown of the amount paid as subscription is as follows: subscription of staff to the Institute of Chartered Accountants of Nigeria, Subscription to recognized trade
Right.
association. Subscription of staff to Nigeria Institute of Management. Agreed capital allowance amounted to 725,000. Compute the tax liability of Fortune Nigeria Limited for the relevant year of assessment. Ignore computation of minimum tax. Yeah, we did not do minimum tax in the previous question we did because companies
Not
that are exempted from minimum tax are what? Companies that are engaged in agricultural business. That's one. And also, the company is in its first 4 year of operation. So, in those two ways, it qualifies for exemption for minimum tax. You understand? Do we understand? So, that is that on that. That is that on that. So, we have Fortune Nigeria Limited.
limited.
Computation
Oh,
of tax liability for we're giving account for 2021, so we'll be computing for 2022 year of
two.
assessment.
Yeah.
So we'll start with what? The net profit. And the net profit is
8.
10,886. So we add back the allowable expenses. So we'll have what? The allowable expenses will be first, we are giving salaries and wages, included housing allowance of 10 senior management staff who were paid a sum of 200,000 each per annum. Now,
And
housing allowance is an allowable expense for the company because it will be taxable in the hands of the individual that is receiving it. Though you know those individuals will be required to pay, they'll be required to pay. So the housing allowance is allowable. However, if what the company paid instead of paying housing allowance was that they rented apartment for those staff, the
staff.
rent will also be allowable, but it must not exceed 10% of it must not exceed the basic salary of that employee. If it exceeds the basic salary of the employee, the excess over the basic salary will be disallowed.
It's
The
allowed.
next one, we have one quarter of the expenses on rent was paid on the apartment occupied by the father of the managing director.
Yeah.
That means the rent expenses is not exclusively for the business. So we say one quarter of how much the rent is
One
2,100. So that will give us how much?
divided by 2080.
Huh?
What is it? I want to see the amount of the rent.
It's
2001.
2,100.
Divided by 4,000. That is 525.
525. Oh, move to the next one. They said half of the
Half.
advertisement cost was incurred on sponsorship of a television program where airtime was allocated for the promotion of their product. That one is allowable. Is to promote their products. Public
Yeah.
relation and entertainment. of 3,150,000 included the sum of 308 paid as commission to a sales agent, also allowable. Breakdown of miscellaneous expenses as follows. For this, cost of computer hardware is disallowable. Cost of computer hardware, because that's a capital expenditure. They should capitalize it. How much? 650,000. Then furniture and fittings. Furniture and fittings should also be capitalized. 550,000.
Cost of fuel and lubricants.
Cost of fuel and lubricants is allowable. So this one should be 680,000.
Okay. Cost of computer hardware.
That one is, yeah, so cost of fuel and lubricant is allowable. Printing and stationery allowable. Donation. Donation to Egba community. Egba community is not in Schedule 5 of SITA. So that would be allowable, 360. But donation to University College Hospital is allowable. Educational and medical institution is one of those. So gift to a gubernatorial candidate is not allowable. Gift to a gubernatorial candidate. 490,000. Then subscription, all of the subscriptions are allowable because they were made to recognize the association. Then we go back to the SOPL. Directors' remuneration allowable, staff salaries and wages allowable, rent allowable, advertisement allowable, transport and traveling allowable, postages and communication expenses allowable, public relation and entertainment allowable, miscellaneous expenses treated, sundry expenses allowable, repairs and maintenance allowable, depreciation. Depreciation is how much? 650. Allowable, disallowable, gift and donation treated, subscription treated, cleaning expenses treated. So what is the summation for all this? What is the summation before we now list non-taxable income? Our non-taxable income will be, they said included in other income was the sum of 850,000 and as profit on disposal of assets. So profit on disposal. What do you say?
3255 total.
3255. Okay. Profit on disposal of assets.
Total is 14,141. 14,141.
We are coming here. Profit on disposal of assets. We have that to be 850. And since that's the only information we have on other income, I don't think any of the income is non-taxable again because we only have turnover and other income. They did not tell us more than that. So we'll now have what? We'll now have our adjusted profit to be how much? Figure
13,3291. 13,3291.
It cannot be
13,291, sorry.
So after that, we can now go ahead to say less capital allowance, Abi. Less capital allowance since we don't have loss. So capital allowance will be capital allowance. We don't have brought forward, but we have capital allowance for the year to be 725. So, and since it is not more than two-thirds of the assets of the net of the accessible profit, so we can relieve it all. So carry forward will be nil. If we now relieve 725 from this, what do we have as the chargeable profit? What do we have as chargeable profit?
12566.
12,566. So we can now calculate our CIT at 30% because the turnover is how much? The turnover is 1 million plus. So 30% EDT at EDT at
3769.
2%,
3769.
3769. So EDT at 2%. That will give us what?
265.82.
265.82. So the second part of the question says what? What difference will it make to your tax liability computed in one above if the company's turnover is if the turnover of the company is 90 million and 1,000? So if the turnover of the company is 90 million and 1,000, I do tell my students that it depends on the mark the examiner allotted to this kind of question. If they allot maybe 2, 3 marks to this kind of question, I'll just tell them that the turnover of the company is 90 million and 1,000. Then the company income tax rate would have been at 20% instead of the 30% we used. But if they allot maybe like 5 marks to it, then I will need to recompute and say, okay, so that's this. So that. So if the mark was more, then we will have to say, okay, maybe they overstated the turnover. Then we will now have to do what? We will now have to less the overstatement of the turnover from the profit and now we compute. But that one is not really necessary. I don't think any examiner will be stressing you for that.
Okay.
Okay, so that's that. I think we've been able to do something
Yes.
tangible, right? Because if we
Of
should
course.
say we should get into another question this night, it may take us another 1 hour.
Sure. It's okay.
We can call it a time, right?